keep it simple, stupid. Don't overthink this stuff. I think there was a pretty good opportunity to establish a risk-free trade. So that would be like your first car. And why don't we paint this first car like yellow, right? And on this first car, right, we'll even label it first car. There it is. You should your first car. I mean, this is like a master class on how to get rich in the stock market. Is anybody interested? It's remarkable how cliche this shit is. So anyway, there is your first car, sell half on a double. I have now established a risk-free trade. I got my original capital back, and now look at what's happening. The way that I designed this to work originally was the histogram here will actually tell you when really good buy and sell signals come into the market. So you can see how these histograms here, this is the short term or sort of like a fast signal. This is a medium term. If you ever get a situation where in the medium term, the market is very oversold and in the short term, the market is very oversold, that's like a no-brainer pivot. And sure enough, you can see how the whole market in the US specifically, it also pivoted right through that window. The question you would ask is, well, why did that happen? Half of the reason us as traders, we don't really ask what the why is. We just ask, is there money to be made using this information? So, here was that April 16th, 17th pivot right here. And you tell me, proof of the pudding's in the eating. I mean, was that signal from the breadth indicator correct? I'd say so. And interesting how the indicator now is actually getting a little bit toppy. And it really shouldn't surprise us because here we are now back up against the top end of the trading range here. Now, I think if you dig into the derivatives markets, things like the options markets, I think you can actually make a justifiable case as to why this mysterious rally out of nowhere happened. And of course, Wall Street, hits a monster home run on this mysterious dead cat bounce rally. And if you look at the data, I mean, the University of Michigan number that came out on Friday, you'd swear we were in a Great Depression now. And yet, ironically enough, the stock market moves up. Why? Well, it moves up because Wall Street wants to make damn sure that all of these options that make money when the market goes down, and they were all very valuable when the market was going down, they want to make damn sure that all of these options expire worthless on expiry day. And this is basically these options expiry day right here. And notice, look at these, like 14,000, 24,000, 22,000, 29,000, 20, 36, that all expired worthless. And then what options actually expired worth something that Wall Street was going to have to pay out? 250, 1,700, 2,500, 400, 4,000. Oh, poor babies. I guess they're going to have to chill out some money there. And then 3,000. So you can clearly see how manipulated this market was. This is exactly why we build the dashboard. And, if you got this email report in your mailbox first thing in the morning with a big red warning, country funds and S&P 500 are both oversold on the short and medium term. Look for a pivot. Well, that would have been a pretty damn good signal. As you can see now, we're actually starting to roll over. We haven't really gotten egregiously overbought in the short term, so I could still see some gains up here. It is interesting to see how slow is working its way up into that overbought camp there. So as you can see from the histogram, nobody is egregiously overbought, but notice, look how the country funds have all flipped uber bullish. So that means if we get a week or so of the market grinding its way higher and we get the country funds egregiously overbought, then that's going to give a warning. Country funds, or basically world equity, is getting egregiously overbought on the short and medium term. Warning. And I tell you, I think that's worth its weight in gold. Something also too for like the slow investors, our weekly commodity trend summary report. I was actually a little surprised to see this today. But if anything, this is perfect. This is exactly how this is supposed to work. Number one, remember when we looked at this when the market was was up top there a month or so ago, there were no fives. And what the hell? There was definitely no sixes. Look at what we got here. We got a six. A six is actually, let's start paying attention. Just for illustration purposes, again, could you get a report in your email? Show me when the weekly commodity trend survey is spitting out sixes. Because I look at this name and I go, this is actually starting to look pretty darn attractive. We're not allowed to chase, so we can't buy this up market. If you did buy this original W at, what is that, $6? Oh, what a surprise. There's $12. So you could have sold half on a double and got your free position established. If you had bought this at $6, $7, looks like a better part of 7, and you'd said, okay, I'm going to sell half on a 5X. Well, then that means you got to see $35 to sell any. Did you get your fill here? No. So this is a really good reason why to sell half on a double principle. Keep it simple, stupid. Don't overthink this stuff. Point here is, I think there was a pretty good opportunity to establish a risk-free trade. So that would be like your first car. And why don't we paint this first car like yellow, right? And on this first car, right, we'll even label it first car. There it is. And let's make this yellow too. So then you shod your first car. I mean, this is like a master class on how to get rich in the stock market. Is anybody interested? It's remarkable how cliche this shit is. So anyway, there is your first car, sell half on a double. I have now established a risk-free trade. I got my original capital back, and now look at what's happening. The weekly trend is still up, and as long as these moving averages are still pointed this way, the trend is still up. So I could make the argument, and you can see where we are in reload zones. You can also see where we are in relative value. If we think about where was like most of the volume traded on this thing. So like little old ladies, you know how much I love my 78.6. What a surprise. The 78.6 is basically exactly where we strapped on the first car. Well, now we're going to take our original capital and now we're going to go and buy a second car. This is how this game works. So, we'll keep this on the screen. Let's watch how we do over time. But I like the idea, if you want a little old lady this, okay, so you came in with your second car here. This would be like your little old lady approach. There's nothing wrong with that. If you're at market timer, I think what you do at this point is you say, look at the weekly trend is pointing up. The weekly commodity trend survey has said, look at the trend is up, but the asset has come back down against the bottom end of its range. It's time for us to start paying attention. So now if you want to really time your purchases, notice the daily trend. You can see it. It's as plain as day. If we get a trade up through this high here, what is that? That's 795. Well, that's a nice big fat W. And actually wouldn't surprise me. It'll be interesting to see if that's definitely broken that M. Show me a W on the other side. And actually you might like seeing whether this is broken. I don't think it has yet. No, we're right there. So if you were like, Brian, I love trend lines and I want to see a W on the other side of this trend line. Okay, I'm totally cool with that. If you're like, well, actually I don't mind. There's a W there. So really all this is going to be is a W within a W. I wouldn't fault you either way. I mean, this is really the sort of the art of trading, what works for you as an individual. I really don't mind if somebody comes along and says, weekly commodity trend survey. I did my first car. I sold half on a double. Market dipped right back down into reload zones and I'm in here aggressively hunting for my second car. Totally fine by me. That's absolutely perfect. Absolutely perfect.